Hey everyone, welcome or welcome back to my YouTube channel. So in today's video, we're going to go over the common 5 mistakes that most traders are making that stop them from becoming profitable a lot faster. If you're just starting out in trading, you're probably making at least one of these mistakes. So let's save you some money and frustration within this video. So I'm basically just going to write it all on the screen. So tip number 1 is going to be that you're not following a solid trading plan. I always say this, but if you fail to plan, you prepare to fail. A trader without a plan is basically just a gambler. And when we're trading, we don't want to be thinking of it as gambling. We don't want to be gambling at all. We want to be trading with the right accuracy and the right plan. So when I say a trading plan, if you guys want to know, I did do a video on a trading plan as well. I'm gonna try my best to link it within this video, but if I don't, I will link the video for the trading plan down below. But basically, what most beginners do is they jump into the market without having a set plan. They jump in without a clear strategy, and they really just jump in with hype as opposed to having a plan set in stone, as opposed to what they want to do with their trading slash what they're aiming for today if they do see a setup in the market today. So when it comes to a trading plan, you're really going to need a trading plan that's going to tell you 3 things. So number 1 is you're going to need a trading plan that tells you, when do I enter the market, right? You're going to also need a trading plan that tells you, when do I exit the market? And then last but not least, I talk about risk to reward a lot. I also want to do a separate video on that. But for this video, we're solely just going to focus on the 5 tips. That's going to be how much you want to risk, right? Because risk to reward is very important. So how much am I risking for the day? Like, how much am I comfortable with losing for today? And then basically go off of that for your first step when it comes to trading. First step when it comes to mistakes that you should avoid when you're trading. Tip number 2 is going to be over leveraging. So when most people come into the market, right, they don't know how much money they want to risk. At the same time, they also don't know how much money they want to gain. So once again, you're treating it like you're gambling, right? You don't really have that set risk to reward. You don't really have that set plan in place. So I think it's very important to not over leverage. So for example, say you wanted to enter a trade. Let's just see here. Let's take gold, for instance, right? Say you wanted to enter this trade just because you'd want to enter the trade with a proper risk to reward. Like maybe, for example, as you can see, we're at an all-time high right now. So you possibly think that the market's probably going to retrace. What you want to do is enter this with an adequate risk to reward instead of over leveraging. So when I say over leveraging, what I basically mean is that, say, instead of risking 2% on your account, you risk 6. We're going to want to make sure that we're avoiding doing that because yes, in the meanwhile, it is great to risk more because you can potentially gain more. But on the other side of the spectrum, you could potentially lose more as well. So say the trade doesn't go your way, then there's a higher chance of you losing more. So in this case, say on your account, you risked 2%. So if you have $1,000 account, you risked $20. If you were to lose that $20, it doesn't hurt as much. Now, if you were to lose $60, it would hurt your account a lot more because say you take 2 back-to-back losses, you just lost $120 when you could have only lost $40. Hopefully that makes sense. A tip that I would do just if I'm starting out as a beginner is to stick to low lot sizes and low leverage when you're first starting out because you want to get a feel of things. You want to get a feel of your win to reward ratio, XYZ. And I think it's very key just to get like a flow for the market, a flow as opposed to how you like to trade. Maybe you're someone that likes scalping, or maybe you're someone that would prefer to swing trade slash stay in a trade for a lot longer and you don't want to be staring at the chart. It just depends and it's really up to you as opposed to what you choose to do. I'm going to say for the first year, the goal is just to preserve your capital. And the goal with trading is always to just preserve your capital and make sure that you basically make it out alive. You want to win the battle so you can win the war. Because if you end up losing 12% of your account, you're going to sit there and you're going to go, damn, I risk 12%. Okay, now you're going to be more focused on making the money back as opposed to just thinking about your trades, right? As opposed to just thinking, okay, why did I take that trade in the first place? What led me to over risking on my account, as opposed to, keeping it low key. But your risk tolerance is also going to be up to you. That's why I say 2% to 6%. Some people can handle a 6% loss and bounce back like this. Other people can't. So it's really up to your risk tolerance. But over leveraging isn't going to help you or anybody in the long term, because that leads you to potentially blowing your account / potentially having no money in your account to trade with. And that's the last thing we want as a beginner. Moving right on over. Tip number 3 is you're going to want to trade with a stop loss. What is a stop loss, you ask? So a stop loss basically essentially will stop you out of the trade at a certain price, and hence the name stop loss. It will stop you out of the trade at a loss, and then take profit would be it stopping you out of the trade with your take profit. So that's the fun part. That's where you actually make money in trading. So your stop loss is where you lose money, but at the same time, it's not where you lose your whole account. So what I used to do 2 years ago is I was queen no stop loss. Stop loss? What's that? I would enter a trade. I remember it like it was yesterday. So my hope is just that anybody that crosses paths with me, anybody that listens to me and hears me out, because I truly believe that there's 2 ways that people can learn. You can either learn from your own experiences, or you can learn from somebody else's experiences, and you can just not do the things that they did, and you can get to your next step in your journey a lot faster and a lot smoother than the average person does. So my goal for you would be to be queen or king stop loss, because I was queen no stop loss. And that really humbled me. I did it for the first give or take year of me trading. I was queen no stop loss because I really thought that I was invincible and that every trade that I take was just going to go my way, and the markets were like, you think so? And I really got humbled. So a stop loss is really going to help you set things in tone. And beginners often tend to skip this step, hoping that their trades will turn around and just go into profit for them. Please, for the love of all things holy, let's skip this step. We're going to skip the no stop loss phase. We're going to make sure that we have a stop loss because we want to preserve our capital. That's the number 1 rule of investing, right? Preserve capital, and our goal is to obviously compound our accounts as well. But for now, just focus on preserving your capital and making sure that your stop loss is in place for every single trade. And a rule of thumb as well would be to make sure that you have a stop loss on your trades before you enter the market / before you press buy or before you press sell. Make sure there's a stop loss on your trade, and make sure you know exactly how much money you're risking, and make sure that it's adequate towards your risk tolerance. So you don't end up being like, damn it, what did I do? That way you don't regret your decisions, right? Like you have to sit back and think, okay, cool. Say I have $1,000 account. Am I okay with losing $20 on this trade? If the answer is no, don't even enter the trade then. I think that's something that would have definitely helped me 2 years ago. But we live and we learn, and my hope is just for you to not repeat the same mistakes that I repeated. 4th thing I would skip is something called revenge trading. So what does this mean? Let's break it down. So say, for example, you take a trade on gold, right? As we're speaking right now, look at the price of gold, it's going up. Say, for example, you decide to take a trade on gold for a sell. You were like, we're at an all-time high. I really feel like the market's going to sell from here. You're like, okay, cool. I feel like the market's going to sell. Short position, boom. You shorted the market right about here. Boom. Okay, cool. Say this trade just decided that it just wasn't going to love you today. It wasn't going to go your way. The market is still in an uptrend. It doesn't want to go back down. The market just doesn't feel like doing that today. This is your trade, right? You're currently in it. You're currently in drawdown, which means that you're currently losing money, whatever the case may be. Maybe your risk is about $40. So what most people do is they'll be like, damn it, I just lost $40. Okay, I lost $40. All right. It's okay if I take another trade. That's fine. So they enter again, they enter another trade. And now you're in this trade for a buy, say, for example, right? Now the buys don't want to work out. And you're sitting there and you're second guessing life and yourself. I would always say, instead of taking a second position, right? Give it time. Say you lost one trade. You have one loss, and then you want to take another trade. What I would do personally, say you lose one trade, that means you have to give yourself at least a 5-minute break, because we don't want to build bad habits. And then once you get into the cycle of revenge trading, you'll always be fighting the market. The market's going to be right there fighting back with you. It's going to be a game of who can punch harder. So let's avoid that at all costs. I would take a 5-minute break and come back later and say, okay, cool. If I see a good solid trade that I can take afterwards, then I will get into another position, right? Then it's not really like you're revenge trading, because you actually had time to step away from the markets, step away from your computer, and actually sit back and think about why you entered the trade in the first place and analyze why you lost the trade and how you lost it, instead of getting in your feelings about it. Because most traders want to do it where they immediately try to win the loss back. They go, damn, I just lost $20. I need to make the $20 back. I totally get it. But you have to understand that with trading comes losses, and you can't just try to revenge trade to make up for the loss that you just made, because these markets will humble you. If you lose a trade, I would say to take a step back, give yourself a 5-minute break. Also, something that helps is to journal your trades, right? Journal your trade. Understand why you entered the trade. Like, why did I enter the trade, first of all? Why did I lose the trade? And kind of have that somewhere in a journal, obviously, in the back of your head, as for why you will not enter another trade. I think that's very important to understand. That way you can look back on it in the future and be like, okay, and then that'll help you get better as a trader. So let it go and always stick to your plan. So obviously some people have a rule of thumb for 2 trades a day. That's my rule of thumb, 2 trades a day, and I'm done for the day on that particular account. And it has to be set in stone, but the discipline is honestly up to you, because you have to be there to follow through and to follow through on it. Stick to your plan. And that's that for number 4. Moving on to number 5. Number 5 is going to be focusing on profits over risk. Most beginners chase big wins without thinking about how much money they could lose. Good traders tend to think in probabilities and win and risk to reward ratios. So probabilities, right? Obviously, as a beginner trader, you're not going to really know what your win rate is. But once you get the flow of things, you'll get into a habit of knowing, okay, I like trading this way, XYZ. When I take this kind of a setup, I usually win this many times out of XYZ times. So that's what I say when I say think in probability, right? So if I have a win rate of 80%, that means that if I were to take 10 trades, I'm going to win 8 of them and I'm going to lose 2 of them. So your win rate would help you a lot more understand and get better at the psychology, because you're no longer thinking this trade might lose. Instead of thinking this trade might lose me money, you're now thinking it's okay because I know that the winning trade is coming. So like, it's like, okay, boom, boom, boom. I just lost 2 trades in a row. I'm not telling you that the next 8s are going to be winners, but it's like, eventually, if you're following your plan consistently and you don't have that room for human error, then there's a better chance that your win is coming. So that's the win rate, right? And then also your risk to reward ratio. You know right off the bat that for every trade that you take, you're taking a trade setup with a minimum of a 1 to 3 risk to reward, or maybe some days you take a trade with a bigger setup of a risk to reward, right? Some days might give you more, some days might give you less, but just right off the bat, you know for a fact, and it's written in the code that this is exactly the trade setup that you follow, and this is exactly what you do. So think of it in terms of risk to reward, as opposed to I am risking $20 on this trade, because people get so caught up on the $20 that they're losing, as opposed to how much money they could make off of the trade instead. A good rule of thumb as a beginner is to never risk more than 1 to 2% on a trade of your account. Say I take one trade on NAS 100, I have a $1,000 account. I don't want to be risking more than $10 on that one trade as a beginner, as I said, because as you level up, your risk to reward and your risk tolerance will become a lot more riskier / better. So yeah, and then 1 to 2%. So $10 or $20 if I have a $100 account, XYZ. And I believe that's pretty much it. So make sure that instead of focusing on the profits, focus on the risk. Avoid these 5 mistakes and you'll be ahead of 90% of new traders already. If you found this helpful, hit like, subscribe, and drop a comment with the biggest mistake you've made along your trading journey so far. Don't worry, this is a judgment-free zone. We've all been there. I appreciate you all for watching this video. And until next time, I'll see you guys in the next one. Peace.